Dr. Jerry Gule, CEO of the Institute of People Management, joins me now. Dr. Gule, thank you so much for joining us. I really appreciate your time.
Hello.
Good evening to you, Dr. Gule. We appreciate your time. Thank you very much for joining us.
Thank you, sir. It's nice to be with you.
And let me also introduce Mr. Jerry Botha, Managing Partner at Tax Consulting SA. Mr. Jerry Botha, thank you so much for joining us.
Aubrey, thank you for having me.
Much appreciated. Let me start with Dr. Jerry Gule. Dr. Gule, what is the Institute? Oh, my word. We've just lost Dr. Gule. We'll try and get to connect with him once more. But perhaps let me go back to Jerry Botha. Jerry, thank you so much for joining us once again. A number of taxation laws seem to have been amended by what the minister had to say in the last budget speech. Which of those laws should we have should we be focusing on as lay people to the taxation space? I know Dr. Jerry Gule is going to connect with us in a few moments' time, but which of those laws should we be aware of, and perhaps how are they going to affect us?
Thank you. Good question. I think for the normal person in the street, this was a good budget from a pure tax perspective. Effectively, there was no increase in taxes for the first time in many, many years. Actually, the first time I can remember, there's no increase in things like fuel taxes. The minister acknowledged the fact that inflation has got a big toll on people. And even things like the retirement tax table, so if you retire, if you cash out your pension, if you get retrenched, those tax tables, which has not been adjusted for many, many years, the minister gave you 10% relief on those. So I think, if you do a deep dive into the budget, the more technical things, people with international trusts, people that is doing all sorts of naughty things in terms of taxes, I think they're going to have a tough time. But for the normal, compliant employee out there, I think this is a very happy budget.
Let me talk to Dr. Jerry Gule. Thank you once again, Dr. Gule, for joining us. I'm going to go into some of those changes in tax laws with you and Jerry in a few moments' time. But please help us understand, what is the Institute of People Management, and why should HR practitioners specifically be aware of the work that you do?
Yeah, thank you for that question. So the Institute of People Management is celebrating 78 years of existence this year. And this organization was started primarily to educate, way back then, we're talking the days of apartheid, to educate people who were dealing with people issues in the workplace, so that you bring about this rights obligation in terms of what the employees' rights are, what the employers' rights are, and that education. So the IPM, the Institute of People Management, then, its sole purpose is to bring together that fraternity and ensure that they are continuously exposed to continuous learning, continuous professional development, so they are not left behind, which is why we're talking about the issues that we're talking about today. So it's a professional body bringing together the whole fraternity for purposes of continuous professional development, so we can adhere to good standards of practice, ethical conduct.
Yeah.
That's what we would try.
To what extent does the IPM facilitate, for example, education, at least in this case, around tax laws, the amendments as we've heard them from the minister, for the benefit of the people that work in companies of your affiliates? To what extent do you facilitate that kind of education, particularly for HR practitioners?
Yeah, this is not something that we have traditionally done. In fact, when Jerry and myself spoke, we said this is something that we need to start doing. So it's actually a first of its kind, the collaboration that we have around issues of tax, because we think they're important. But I must say that within the HR fraternity, there are other professional associations that do that, because this is quite a specialized area. and it needs specialized knowledge, as it were. So people like Jerry come in, and HR professionals, we always encourage them. We believe in collaboration, so we encourage them to participate in programs that would enhance their skills. They may not necessarily be run by the IPM, but in the collaboration that we have with other institutions, then the professionals get exposed to that. Those specialists in the REM area, which normally will be the remuneration area, which deals with these things, would obviously be continuously exposed to that. They belong to the fraternity, but they may belong to another professional association that helps them to develop.
Right.
And we have seen it fit that we do this because, the world has become a little bit complex, and so why not take advantage of opportunities to educate our members? Hence, we're doing this tonight, and we'll be doing it again next week.
How big is your membership, Dr. Gule? And which sectors are you representing? In other words, are there specific sectors, HR practitioners of specific sectors, or is it across the board?
It is across the board, and we take the view that it is from cradle to grave, meaning when you start your career, we would, in fact, before you even come to before you even get employed, we have a student level membership, meaning that students who are finishing their degrees at university, we all universities, we encourage them to affiliate with the IPM because we simply believe that you learn from those that have walked the path before you. So our members who are across all sectors of the economy, we have even members in the academia, we have members in government, lots in the private sector. All those members, the whole intention is to exchange expertise, to exchange knowledge, to mentor, to coach. So it's credit to grade that we as IPM believe in.
Mr. Botha, thank you so much for just holding on there, because I just wanted to get a sense of the relationship, for example, between your organization and the IPM. I imagine that your organization would be the organization that provides the support services that Dr. Gule is talking about in terms of the training of HR practitioners precisely about these tax laws, the amendments that you and I are going to talk about now?
Yeah, we love training people. I think that is there's a bit of a teacher in all of us. So we're very appreciative of the fact that the institution of the Institute of People Management, they're a volunteer institute, and they're not there to make a profit or have a profit motive. And I think that it's one of the most fulfilling things for us at the most basic level sometimes, just to be able to train somebody to understand really their payslip. It is actually surprising how few people actually understand their payslip.
I still don't understand my payslip, Jerry. I don't understand why the number's so low. It is what it is. Yeah. So you explain to HR practitioners specifically, or do you extend your training even to people that work for companies?
We do that. We've got a couple of big mining companies that, and large corporates that really care about their staff, that we actually take it all the way down to kind of shop steward level, where we train them in terms of how does those pay slips work. And that it's not just the machine that's calculating your tax. When you're getting a bonus, suddenly you're not necessarily getting taxed more. And I just think that is part of a financial education process.
Yeah.
And we are actually surprised sometimes how even payroll people that for 20 years have worked on a payroll system do not understand the fundamentals of how tax works. I often say that you sometimes with people do not have 20 years of experience, you've got 20 years of the same year's experience. So it's a very, very fulfilling exercise to take people through that. And the moment you click how tax is calculated, you think, oh, that is actually so easy.
Let's talk about some of the new tax legislation, Jerry. We started because I actually wanted to understand from Dr. Gule how your relationship works. A few important amendments have been made to the taxation laws. For example, Amendment Act 2021 and the Tax Administration Laws Amendment Act 2021 that affect both employers and employees. Changes were also made to the Basic Conditions of Employment Act, earning threshold, and the national minimum wage rates. Let's talk first about the pay-as-you-earn withholding from annuities pension. What does that mean?
Well, the problem statement really arises at the most basic level. Let's say, for example, you go on early retirement. And if you go on early retirement, and let's assume that you only get 5,000 Rand a month, that is well below the tax threshold. There is going to be absolutely no tax for you to pay by the company that pays you out your monthly pension. So on your RP5 certificate, 5,000 a month times 12 months, 60,000 is what you've earned. There's no tax on that. But let's assume then that somebody, let me first just talk on why there's no tax on that. Obviously, they've moved the tax thresholds up to make way for effectively what I would simply call inflation relief. And as it stands, you can now earn about you probably can. It's tough to always come to an exact number on this, because it depends on how much you've got in terms of things like medical aid and all sorts of things like that. But you can kind of earn easily 85,000 a year. It's a safe number. Actually, just above 90,000 a year at the moment for this current year, and pay no tax. So 60,000 is below that threshold. But let's assume now, for example, you go and work again after you've got this pension, and you earn into the tax threshold. Let's assume you earn $1 million a year.
Yeah.
At $1 million a year, you're gonna pay properly into the tax tables, if I can call it that. Now, at the end of the year, let's just for ease of reference say you fall into the 40% bracket because of the $1 million that you've earned. SARS at the end of the year get both those RP5 certificates, and they add that 60,000 RP5 certificate to your other certificate. And suddenly you have to pay 40% on that 60,000, 24,000 in tax. And very few people can afford that. So that is really one of the big amendments, is to basically tax that pension during the year, even though you below the threshold, to say, but you've got other income, you should pay tax every year on both.
Dr. Gule, is there, in your experience, a need for tax education specifically for HR practitioners? I'm sure that there are other sort of skills and competencies that HR practitioners should have. But tell me about the level of understanding of taxes and how they work, the mechanics thereof. What is your experience in terms of the embeddedness of knowledge about taxes amongst HR practitioners that are affiliated to you?
Yeah. Well, I think the experience and the educational level would vary greatly. As I indicated earlier, that there are specialists who, their role is to actually deal with the stuff. What makes up that payslip? How is it calculated? If that's their role, that's what they do every day. So they would be very familiar with some of the nuances of the taxes. But tax is a specialized area, so that's why we have people who train in it with that deep skill, that deep knowledge, like Jerry and others. Your general HR practitioner, depending on what their portfolio is. For instance, an organizational development specialist, a business partner, may not necessarily have deep knowledge. But people, of course, vary, and it's interest. So some may have an inclination to say, no, I want to understand this even deeper. The fact of the matter is, HR practitioners deal with a lot of data, and some of the data is the data that's what we're talking about today. So they need to at least understand the basics of that, and where they need specialist knowledge, then call in the professionals, because you don't want to make a mistake with this kind of thing, particularly as you advise employees, because as you set up structure packages for them, you don't want to put them in a worse situation than they should be. So, to answer the question, it varies. It's not the same.
Yeah. Let me invite you, especially if you are an HR practitioner, how much of the tax laws and the way that they are to be applied to the people that you serve in your company do you know? What levels of competency and understanding do you believe you need in order to be of service in that regard to the people that you serve? Give me a call. I'd like to hear from you. 011-883-0702 is the number to dial. My guest, Dr. Jerry Gule, CEO of the Institute of People Management, together with Jerry Botha, Managing Partner at Tax Consulting SA. Jerry Botha, with two Jerrys here. Jerry, I want you to talk a little bit about the long service awards together with the retirement fund fringe benefits, especially the risk component in the new legislation or what was announced by the minister. Talk to us about that and what it is that we need to be aware about as far as that is concerned.
Yeah, I think, I'll deal with the retirement changes first. The massive change to retirement fund is actually only kicking in 1 March 2024, next year.
Yeah.
And this has been many years in the making. We were actually in Parliament when kind of this process was started. And effectively what it means is that into the future, there's effectively going to be 3 pots of retirement. And we will not be able to kind of run through all the rules, but the basic principle is that government wants to really encourage people to not be able to dip into their retirement whilst they are working.
Right.
And when you do dip into your retirement, they're going to tax you at a very high rate on that. If you decide to dip into your retirement,
you're saying that you can dip into your retirement, even though at a higher sort of penalty, you now can?
The law will allow you to do a partial withdrawal from that. That is correct. So basically, there's a 3-pot system proposed. I mean, it's quite a technical explanation, but it was quite well published that you will be able to effectively have what you call 3 pots, which is a savings pot and a retirement pot and a vested pot. And that savings pot, if you've got an emergency, you can do a minimum withdrawal of 12,000 Rand in a 12-month period, and you're going to pay tax on that at your maximum tax rate. And then you've got what you call your core retirement pot, which will basically be 2/3 of all your contributions available on retirement, and on that you're going to pay a lower tax rate. So the maximum tax rate you can pay on that is 36%. And then you've got what you call a vested pot. And that vested pot is all the money that you've put into your retirement up to 1 March 2023. And that pot is basically will always be taxed according to the old rules. So in other words, you will not be taxed on that money under a higher rate. It's a bit unfair to kind of do this explanation without slide to your audience.
Yeah.
But if it's needed, I'll gladly will put up a slide on this. I'm also presenting for the Institute of People Management. I think it's next week or the week following. It's next week, and I will put details of that on 702, or you can just always come to our tax consulting website.
And perhaps you can give us those details just before we close this conversation.
Would love to.
What, Jerry, from your experience? I mean, these are very technical sounding things, right? What do HR practitioners need to understand as a baseline, just about these new protocols and laws? What do they need to understand as a baseline sort of concept that says government is actually changing these laws generally to do what? Is there a specific meta purpose for why government is changing all of this? And perhaps from there we can begin to extrapolate the various ideas that come out of that in order to really zoom in on what HR practitioners must know in order to assist their people.
Yes, I think that, the overarching principle in the most simple form is government do not want you whilst you're working to touch your retirement, because people that touch their retirement tend to spend it, or perhaps not make wise decisions, and in their retirement try one day don't have money. That's the theory. So that is the overarching principle. They really want to kind of make that difficult. But they don't want to be inhumane and not allow you to have some emergency access to it, because it also does not help that you retire one day and you're in a debt trap. You've got no money whatsoever. As far as HR practitioners are concerned, I think, it really is the job of your retirement fund that serves your company to educate your members, or its members rather, and your employees. So I think the role of the HR practitioner is, yes, they should understand the fundamentals of that, and that's easy. But more important, they need to know how to look after their employees by holding their retirement provider accountable, for kind of charging the right fees and allowing the right flexibility and being competitive with what they do. Because the other big issue that National Treasury has raised, and they've got extremely good statistics and numbers to support that, is that the fees of providers hugely erode people's retirement. And that makes a massive difference how much people have got to pay when they retire. And that is the one reason which in previous budgets was really the driver behind why they said we need a social security system. And obviously in this budget, what's very interesting is that they've not mentioned the social security system or kind of hammered on that like in previous budgets. And also they seem to have moved off the idea of introduction of a wealth tax, which was at least implied in last year's budget speech.
Why? Why has there been a move away from the idea of a wealth tax, Jerry?
I don't kind of walk the shall I say it, the corridors of power, but I do think if I in my layman's terms have to read the room, a very, very big number in South Africa is obviously how your tax base is distributed, if that makes sense.
Yeah.
And that is something that we really will look at in the kind of in the webinars that we'll host. But the overarching principle is if there's roughly 15 million odd taxpayers in South Africa, more than half of them pays zero tax. And if you look at the higher brackets of tax, that's the guys that is really contributing towards the fiscus and tax, those brackets are effectively shrinking. and especially it is shrinking at certain very concerning places. And in the after the budget speech, there was obviously parliamentary hearings. I think it happened on 1 March 2023, and it's in the media how the commissioner, Mr. Kiesetter, basically came out in defense, because the narrative that he faced, I understand, was they were saying that high net worth individuals are immigrating. Look at your statistics, because you're chasing them away with high taxes. And his rebuttal was, no, they are immigrating for many other reasons than tax. That's not a fair statement. But I do think, and it's kind of been acknowledged in so many words, that individuals in South Africa cannot face a higher burden of tax. You kind of taxing guys to the hilt. And of course, the issue in South Africa is really not the tax you pay, but what you get for your tax. And I mean, it's common knowledge that in other countries, whilst you might pay the same amount of tax, you would have healthcare, free education, electricity, perhaps that's cheaper fuel. And that's kind of the narrative in terms of how does the tax base and the tax hit impact people, that they feel they don't get value for the tax that they pay. There's certainly an undertone of that.
Dr. Gule, one of the biggest concerns in this country is the issue of the flight, or let me say the moving away of talent, people that are very talented going to other countries to find greener pastures. But I see that there are certain incentives that have been put in place to try and keep people in the South African economy. What are the incentives that you, as the Institute of People Management, putting in place for HR practitioners to be able to know about these new tax laws so that they can impart that information precisely about issues such as incentives? We're going to talk in a few moments with Jerry about the learnership tax incentive, for example, that was a big issue, the tax certificates and penalties. But is there an incentive that you provide for your affiliates to be able to understand these principles, these tax principles, a little bit more, and perhaps even to deepen their understanding of tax laws in order to serve their constituents?
Yeah, no, listen, this is not an area that we have traditionally ventured into, but I think with time and with partners, it's something that we realize that we need to be doing more and more. And this is I think is the beginning of many that we will be engaging in, just to make sure that our members can indeed deliver on their mandates and make sure that people are fully exposed. I mean, you were talking to Jerry about what is it that HR people need to know. There's a lot that they know. I mean, it's not like they don't know things to do, but it's just to make sure that if it's not planned, if it's not someone said, if it's not in the diary, it's not going to get done.
Yeah.
And you don't want these shocks of people getting into the stage where they have to retire and they're not prepared for it. So, as Jerry was saying, making sure that your employees are prepared. I think it's more reminding our members of what some of their duties are, making sure that people are prepared for retirement, ensuring that. For one of the challenges, for instance, that retirement funds or provident funds have is that, God forbid, if someone passes away, if he has not been keeping proper records of beneficiaries and all that, it's going to be a struggle to get those monies paid out. So it's important just to get the basics right. And in some of these webinars that we will have going forward, we'll be looking at all those permutations. That is, when you bring the relevant people to come and educate us on those things. This time it's Jerry Botha because of tax. He's a specialist in that. He's a specialist in how to help people structure their packages. And so HR practitioners need to understand that. It's one of the things that they need to understand so that without avoiding, we are not about avoiding tax, right? It's about understanding what is allowed, what is not allowed, and then helping people to structure their things accordingly. So I just would say that no, traditionally we haven't done that, but it's an area that we are venturing into.
Give us a call, 011-883-0702, talking about the various tax laws that have changed as per the announcements by the Minister of Finance a week and a bit ago. What is it that you believe you need to understand to be able to teach, to be able to assist in terms of tax matters, your workers at the company that you serve? I'd love to hear from you. What are the challenges that you believe need to be understood and overcome for a better tax compliant workforce in your company? What are you doing to get more training? Are you a part, perhaps, of the Institute of People Management? My guests, Dr. Jerry Gule, who's CEO of the Institute of People Management, and Jerry Botha, Managing Partner at Tax Consulting South Africa. And we're having a conversation about some of those different laws that have changed, how they may affect you. But I'm more interested at this point to hear from HR practitioners who are concerned about their level of understanding of the new tax regime, what it is that you're concerned about, how you perhaps convey some of these matters and issues to your staff. I'd really be interested to hear your thoughts about that. Jerry Botha, there are a number of tax incentives that government will be putting in place. What are those and how do I access them? One of them, for example, is the issue of solar panels, right? Many people who are in companies who work are probably going to be thinking about buying a solar panel system, fitting it onto their roofs because they need it, but also because there is some sort of incentive that was announced by the minister. What is that incentive? And are there other incentives in place for workers?
Yes, I think there's no other than solar, which is obviously all tax-based. If we just look specifically at workers, the only real incentive there is obviously learnership allowances. They've extended that for 2 years. Basically, the government effectively funds that by allowing a company to claim an allowance of basically 40,000 per year and an extra 40,000 when learnership is completed. That is for your entry levels 1 to 6. But there's no new big announcement there. The one that was kind of in the media and it turned out to be true is this whole issue around solar panels.
Yeah.
There's some interesting debates on it. There's already a massive amount of misunderstanding on this. But I mean, effectively, there was two announcements made around this. So, in terms of companies, basically a company can deduct 125% of the expense that they incur on solar. So they really are encouraging companies to obviously put up solar, and then the more basic one is the 15,000 rand announcement that was made, and of course the immediately what the market picked up is to say that you're only paying for rooftop solars. What about batteries and inverters? Because if you put in a solar system, that is the expensive part. And government did a good job by explaining to say, listen, we're actually interested in guys that generate additional electricity because that will help government. So I presume they're going to make work of allowing more people solar to connect to the grid. and put the extra solar onto the grid. The thought process is that obviously, whilst you need an inverter and batteries, your lights can still work during the day without that, but they do not give additional generation, so to speak. So that was the thinking why it's only for rooftop panels and not for other parts. There's a 15,000 cap on it. That 15,000 cap is effectively a reduction in your tax, so it's more than what you think. It doesn't mean that you can spend only up to 15,000. You just effectively sit with a cap on that. That is the amount that you can deduct for tax purposes on the solar. So I think it's quite a novel change. It's a necessary change, but obviously, as a tax practitioner, I'd like to see far more tax changes like this to drive good tax policy. If I can add that, and I think just to round it off, perhaps the last thing to just talk about is that they have effectively extended, kind of incentives to hire young people. Basically, it's employment tax incentive, and their view is that it is working. It is a way to get people into the job market. So obviously that was extended as well, and there's been questions asked around, is it really working? And they kind of believe that there is sufficient proof of the fact that is actually generating jobs and getting people into the market to get experience, which in general I think I would agree with.
Dr. Gule, as we come to a close, if there are companies, for example, that have an HR team, an HR specialist that perhaps isn't affiliated to the Institute of People Management, why should they, if they haven't affiliated?
Yeah, good question. Well, they should, because we the mother body of the HR fraternity. That's one. Secondly, they will upskill themselves. We have a fantastic relationship with other organizations, some local, others international, for the growth path in HR, so that you reach that top level. Particularly in a world of work where you need diversified skills. We talk about learning, unlearning, and relearning, and we provide those opportunities for HR practitioners to learn. Well, one of the institutions that we have affiliated ourselves with, and if you come through us, the IPM, for this development, you get preferential rates, is an organization based in the Netherlands called AIHR Academy. They are top-notch in terms of the programs that they run. If you go to their website, for instance, you can go through our website to reach their website, the IPM.co.za, and you look at the programs there. You will actually see that if you are not continuously developing yourself, you absolutely are going to be left behind, because there are new skills that the new world of work requires, not traditional skills. The whole HR role is changing, and it's changing fast. And I think our HR colleagues have actually done very well, some of them, but there are others that are not on the path. And if you are not on the path of self-development, growth, you're going to be left behind. We, the Institute, that can help you to do that.
Just give me a sense, once again, Dr. Gule, about the various competencies that you try to sharpen for HR practices, other than tax skills or tax management and tax issues. What other things do you offer as upskilling programs for HR practitioners?
Yeah, I mean, right now, one of the really hot things that HR practitioners are having to deal with is addressing issues that have since hit or affecting people in organizations around just well-being. holistic working, and helping people to deal with that. And also, this afternoon I was talking to someone, we're also thinking, how do we help the helpers, meaning the HR people who sometimes that get all these things, but there's no support.
Yeah.
And so we're looking at, first of all, they must have an understanding of how do we help our organization, our people to be resilient. So emotional intelligence, we have really been working on that. Mental health or well-being, we have been working with that, exposing people to that. The style of leadership has had to change because we have 4 generations of employees in the workplace. How do you manage them? You can't manage them in the old traditional way. So part of what we're dealing with, we've been dealing with equipping people to our practitioners to find if they need that kind of thing, where would they go? And we link them with that kind of information.
Jerry Botha, as we close, I believe that there is a conference coming up that you're going to be having for HR practitioners, where some of these topics are going to be broached. When is it taking place? Where, how, and how do people get registered?
Thanks, Rudy. They can firstly, it's for free. It's part of how we give back to the community. It is next week, Tuesday. People can go to the tax consulting website, or we will also share with the producer the details. And really, I think all the, shall I call it, the difficult concepts that we've discussed here, it's far easier with examples and slides. So if anybody is interested in this, next week 10 o'clock, and I think that it's also often, on a hot topic like taxes. Very often, HR practitioners, on a webinar, you've got the beauty of being able to ask that detailed anonymous question. So everybody is very, very welcome. Thank you.
So this is going to be an online event. It's not going to be a physical event.
It is. It's an online event. I think it just allows us to have a far greater reach. So you can sit anywhere and log on. And I think what is interesting about these online events is the amount of engagement you get from questions. So if you've got a bit of time, don't just attend the event. You learn sometimes so much from the questions that your fellow professional HR practitioner ask. That and there in itself is the beauty of education.
Indeed. Jerry Botha, Managing Partner at Tax Consulting SA. Thank you very much for joining us this evening.
Thank you.
Lost Jerry there. Jerry Gule, Dr. Jerry Gule, thank you so much for joining us. We really appreciate it. CEO of the Institute of People Management. Much appreciated.